Hi, my name is Alex and I'm the product manager for Aplos. Today I'm going to tell you about fund accounting. In normal accounting, you keep track of your assets, liabilities, equity, income, and expense. Those are the 5 different categories. But for fund accounting, you need to track that, but for each area of your organization that's designated for a specific purpose, or what we call a fund. So in fund accounting, let's say you're a church and you've got 3 funds. A general fund where you pay most of your bills, missions fund for outreach, and a building fund for improvements to your property. Okay? So those are your 3 funds. So let's say you get a checking account and you've got $10,000 in the checking account. Then let's say you get a grant to do some missions outreach, and that is $5,000. So you go to the bank and you deposit the $5,000 into the 10, so your new checking balance is $15,000. With normal accounting, that's where that kind of ends. You've just got $15,000, great. But in fund accounting, you want to know, out of that 15, how much is set aside for my specific purposes. So if you have fund accounting, you could see something like this. So you've got the total, which is $15,000, but a third of it, or $5,000, is set aside for your grant or your missions fund. So if you have different funds, you can see different slices of the pie, so you know that my checking account is 15, but then I've got this much designated for this fund, this much designated for that fund, so on and so forth. So this section right here, this third, would be kind of a strawberry pie. Apparently that's tasty. You could have also some blueberry and maybe some chocolate, salted caramel. If you enjoyed today's content, click the subscribe button and we'll send you weekly emails with more tips.